What's up, gang? I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough illustration problem on how to properly use the accounting equation to solve for transactions. So if you're unfamiliar to what are transactions and the accounting equation itself, don't sweat. I dropped a link for a video that could get you up to speed in no time. So without any further ado, let's get it. All right. Indicate the effects of the following business transactions on the accounting equation from Sam's Snack Foods and supplier of snack foods. Transaction A is answered as a guide. Let's see what we have here. What is this? Okay, so these are the different ones. Gotcha. Different transactions. And so they did the first one. So let's check it out. Sam's Snack Foods received cash from issuance of common stock to stockholders. So, gang, I'm a big advocate of identifying the keywords. We want to be as effective and as efficient as possible with transaction analysis. So if it isn't a keyword, we're not going to use it. Most of the time, those keywords will guide you to the right accounts that's affected. So let's take a look at this one. What are the keywords in this example? Received cash and issue common stock. Those are the keywords. And guess what, gang? Based on those keywords, they give us the accounts that are affected. Cash and common stock. So cash we already know is an asset, and common stock is a part of stockholders' equity, particularly paid in capital. So when we issue common stock for cash, what is happening to the company? Cash is going up in the business, and common stock is also going up, causing stockholders' equity to go up. So the answer would be increase the asset would account cash, and increase stockholders' equity would account common stock. Easy breezy. Let's try this other one. Cash purchase of land for a building site. What are the key words? Cash purchase and land. So based on those keywords, what accounts are affected, gang? Cash and land. Cash is an asset and land is an asset as well. So what's happening? We're basically swapping one asset for another. We bought some land and we used cash. So land is going up in the business and cash is going down. Both of them being assets. So, question, what is the effect of total assets based on this transaction?
3 days later.
Nothing. The total effect on assets is zero, zilch, nothing, nope. Why? Because all we did was swap or transfer one asset for another. It's kind of like losing 10 pounds in the head, but gaining it in the feet. You weigh the same, gang. So keep that in mind when exchanging assets. So one asset is going up, and the assets that's going up is the land, and assets are also going down. Under what account? Cash. Let's see what we have. Yep, good. Moving on. Paid cash on accounts payable. Keywords: paid, accounts payable. Now, gang, anytime you see the word paid in a transaction and the company is paid, cash will always go down. Remember that tip, okay? So we know cash is an asset and it's decreasing, and we're already halfway there from the keyword. So what was the other keyword? Accounts payable. Now, anytime you see the word payable, it's a liability. All payables are liabilities, which means that the company owes someone outside of that particular established corporation. So we paid cash on our accounts payable. So what happened to that liability once cash was paid on it? That liability, that amount owed, that accounts payable should do what? Go down. So let's see. Our assets are going down as well because of the keyword paid. Under what account? Cash. And obviously, since we paid on our account, the amount we owe decreases, causing the liabilities to decrease. Under what account? Accounts payable. Check the answer. Bags all day. Moving on. Purchase equipment, signed a note payable. Again, keywords, equipment and note payable. Equipment is an asset, gang. So we bought some equipment. So guess what? That asset is increasing in the business. How did we buy it? Through a note payable. Keyword, payable. As I just said, that's a liability. And since we purchased this asset with a liability, we now owe. So our liabilities in total does what? Increase from this transaction. So let's see, we have an increase in the asset under our equipment account, and we have an increase in a liability under our note payable account. Check the answer. Bags all day. Moving on. Perform services for a customer on account. Keywords. Perform service on account. 2 keywords.
That's a lie.
Actually 3. Perform service. Gain. Anytime that the company performs a service or sell a product, revenue is being generated. Keep that in your noggin. So, when revenue is created, it affects income, thus affecting the retained earnings account, which belongs in a part of stockholders' equity. So anytime revenues is generated, stockholders' equity will increase. Now, it was on an account, gang. That's the key word. Now, that account keyword is kind of tricky because 2 accounts could possibly pop up in your noggin. Either account payable or an account receivable. But think about the key words. Let them guide you to the right solution. Now, the company just provided a service. So, should the company be receiving cash in the future or paying cash in the future? Get it? So therefore, what account is affected is the account receivable, meaning that the company is going to receive cash in the future for that service that has just been performed. And accounts receivable is an asset. So our assets are going to increase under our account receivable, and our stockholders' equity is going to increase as well under our revenue account. Where is it? Check the answer. Bags. All day. Moving on. How many do we have? Okay, we're almost there.
You're a liar.
Not really. Employees worked for the week but will be paid next Tuesday. What are the key words? Will be paid next Tuesday, and employees worked. So this one is kind of hairy, gang, as you can see, because the keywords are very elusive, right? But what actually happened? Employees had worked, and this company is going to pay them next Tuesday. Now, anytime employees work, the company has to create a salaries expense, right? Salaries expenses happen to affect income. Expenses decrease income, thus affecting retained earnings. And we know at this level that retained earnings is a part of stockholders' equity. Therefore, anytime expenses happen or incur, stockholders' equity goes down. Now, based on this situation, the company hasn't paid for the salaries that happened. So that means the company still owes for the salary. And anytime the companies owe, you got it, a liability must be created. Okay? So therefore the liabilities will go up. So let's look at this example. We just said the liabilities will increase, and it should be for the salaries payable because they haven't paid it yet. Now, we said that anytime salaries incur or happen, it's an expense, and expenses decrease equity, gang. So we have to find the salary expense. We're going to check this answer. Bada bing. Moving on. Receive cash from a customer on accounts receivable. What are the key words? Receive cash on account. 3 key words. Receive cash is an easy one. It's a freebie, gang. We know cash is an asset, and it's going up. So we can go straight to that right now. Our assets increased under which account? Cash. We're halfway there, gang. Now, we received cash on our account. We collected on our account. Now, this is what you have to consider. An account receivable is set up to receive cash in the future. But once the future becomes the present and cash is received, that accounts receivable needs to do what, gang? Go down. Thus causing the asset, accounts receivable, to go down. So therefore our asset will decrease, and that particular asset is accounts receivable. I feel it through the grapevine that you guys are getting it.
Makes total sense.
Let's keep it going. Borrowed money from a bank, signed a note. Keywords, gang. Borrowed money, signed a note. Okay? Anytime a company borrows money, guess what? The company now what? Owes. And if the company owes, a liability has been created, thus causing the liabilities to go up in the accounting equation. Now, the other key word was signed a note. So we know that 95% of our liabilities' last name will be a payable. And since they said that the company signed a note, that means a note payable particularly was created. So what about the other account? We borrow money. So we know when we borrow money, what happens? Cash goes up, and cash is an asset. So our assets are increasing under our cash account, and our liabilities are increasing as well under our note payable. Check the answer. Bags all day. We are almost finished, gang. Cash dividends paid to stockholders. What are the key words? Cash dividends. That's it. Cash dividends. So, whenever a company gives out a dividend, or a cash dividend particularly, two things are happening. Cash is going down because it's an asset, but by definition, dividends is income given to the shareholders. And since it's considered to be income, it must affect retained earnings, because retained earnings is the income that is retained by the company. How does it affect retained earnings? Negatively. Dividends decrease retained earnings. And so if dividends decrease retained earnings, it also affects what part of the accounting equation? You got it. Stockholders' equity. It goes down. So our assets are going down, particularly cash, because the company paid dividends, and stockholders' equity is going down as well. Remember, gang, two parts of stockholders' equity: paid capital, which is common stock, and retained earnings. You could never forget that. And it's going down because of the dividend account. Check the answer. Bam. We're done, gang. So give yourself a round of applause, because as we proceed through examples like this is further strengthening your knowledge of becoming an accounting master and making bags all day. I'm Dr. Who, and hopefully that light bulb clicked. And if so, share the channel with your friends, like the channel, subscribe to the channel so you can learn how to chase the bag with this accounting information. Remember, accounting is a joke, and I'm teaching you the punchline. Hopefully I'll see you soon.